Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Hurt, the one, the only, and Lanny, the Dividend Diplomats, the best dividend YouTube channel in the world. Guys, let's go. We're talking about three stocks I'm watching to finish out the month of April 2023 and heading into May 2023. I own all three stocks. Can't wait to dive into these bad boys.
Let's let them know what your three stocks are on your watch list. But before we do that, subscribe to our channel. Give this video a big old-fashioned thumbs up. We thank you for your support, everybody. Help us keep growing our Twitter following. We appreciate it. And our YouTube subscription too. It's been we've enjoyed it. Well, now let's get into your top three stocks to keep an eye on going forward, Lanny.
Thanks, Bert. Yeah, we're filming this here on April 22nd, here on a Saturday morning. If you haven't caught our last video, bro, it covered him and his wife's top five dividend producing stocks. Very exciting stuff to see what kind of rounds out the portfolios there. And we always showcase our portfolio, so definitely check the link in the description below, guys. So today we're going to talk about three stocks I'm watching. I own all three stocks. And these are three stocks that I'm looking to buy because I've been buying them this year in 2023, maybe even been buying them recently in the last few weeks and few months. And they're kind of in three industries that I'm fairly light in. One is kind of the chemicals, materials industry. The other one is in an insurance, health industry. The other one is, would you consider them healthcare, pharmaceutical, Bert?
Yes, healthcare, pharmaceutical, consumer staples as well. So
For
they're
now.
for now until you own the part that will be consumer staples going forward. So that's what's going to be interesting, Lanny. So really fast, how do we evaluate these stocks to determine if they are undervalued dividend stocks to buy? We run them through the Dividend Diplomats dividend stock screener, which features three metrics and a bonus fourth metric. One, PE ratio less than the S&P 500. Two, payout ratio less than 60%. Three, history of increasing dividends, where we look at the 5-year average dividend growth rate and how many years a company has increased its dividend. And then lastly, the dividend yield. So everyone, get ready, get hyped. We're going to talk about Lanny's three stocks. Lanny, why don't you tell us about that first company here?
Yeah, we'll talk about the first company here because I actually did buy a share, I think, in between the $95, $97 range. Again, the S&P 500 did finish off the week fairly flat. But I'm trying to get back to being aggressive. I got big dividend income goals this year, next year, 5 years. I've got to get there. And again, trying to build up positions that I'm light in. My first stock is LyondellBasell. They're back on my list. Ticker symbol is LYB. No, they're not in the 80s. They are in the 90s, trading at $93.83. Down over the last 52 weeks, 12%, but they're actually up this year about 12%. So it's funny that the stock's up and I'm looking to buy. But it's more so when you look at the metrics, they, very solid dividend stock metrics right now.
Yeah, and that's why we look at the PE ratio and the forward earnings too, especially with it, because just because the stock price is going up, earnings are also going up as well. So the company may still be undervalued, even though you've seen an appreciation in the stock price.
Exactly. So, forward EPS is about $9 a share. PE is about 10. Digging into that second metric, the payout ratio, guys, producing a $4.76 dividend per year or $1.19 per quarter. Again, we're not including that special dividend that they delivered to the shareholders last year, which was huge. That payout ratio is about 53%. So in that 40 to 60% sweet spot for LYB.
Their 5-year dividend growth rate is 5.8%. And they've increased for 9 years. And again, that does not include the special dividend. They've been known to reward shareholders with a nice, juicy, meaty special dividend every once in a while that can exponentially grow then juice up that dividend yield in the year they pay it.
And then that dividend yield at the time of this video right now is 5.07%. So definitely well above the S&P 500, well above my overall dividend stock portfolio yield. So my taxable account's actually yielding about 3.4%. So this one is definitely higher than my overall portfolio yield. Again, their market cap's 30 billion, so they're not a small player either.
Yeah, it's great. So just to summarize, P ratio 10.4, payout ratio 52%, 5-year growth rate 5.8%, increase for 9 years with a yield of 5.07%. I see why they're on your watch list, Lanny. I see why you're grabbing them in the low 90s. It makes all the sense to me. Let's check out that second company.
All right, guys. Again, usually you don't really expect some of these dividend stocks from me, but I do buy a few higher dividend growth stocks with the lower dividend yield. And I actually own 5 shares now officially because I did buy one last week in the mid 440, about $445 and some change. I own 5 shares right now of Elevance Health, ticker symbol ELV, again, formerly Anthem, again, the big health insurance provider in that space. I mean, they're fairly large at over 100 billion by market cap. Stock price is down over 10% both this year and in the last 52 weeks. And once we get into the dividend growth, that is the reason why I really like this dividend growth stock. But they're currently trading at $450.74. And no, this is not a typo or a incorrect forward EPS, but forward EPS is $32.84. So the price to earnings is actually under 14 times right now for this massive company.
Insane. Let's look at the payout ratio. Their annual dividend's 592. That's a very low payout ratio of 18%. Beautiful.
Yeah, I mean, again, so it's a very low payout ratio, which, let's get into the dividend growth standpoint. When you go back to Anthem with Elevance Health, when they changed their name and ticker, they've actually been increasing dividends now for 11 plus years. And the average rate, I believe, is 13.7%. Somebody can correct me, though, in the comments below. So 13.7% for this high dividend growth stock. So the question is, with the high dividend growth, Bert, what does that dividend yield look like right now?
It's 1.31%. So it checks the box of, if you are going to buy a low dividend yield, it offers a very high dividend growth rate. That's what you want to see: low yield, high dividend growth, and they crush that metric out of the water. So just to summarize here, P ratio 13.73, payout ratio 18%, 5-year dividend growth rate 13.7, 11 years increase in dividend, and the dividend yield is 1.31%.
And just to give some frame of reference on this, on why it might be nice to buy some high dividend growth stocks, because with the yield on cost of 1.25 to 1.35%, but if it's growing at 13 to 14% every year, by year 7/8, more than likely your yield on cost is well over 3%. And then it just keeps, again, compounding after that. So you'll be yielding 4 or 5% in pretty much a decade. So that's why you buy higher growth stocks, for that future punch to the income.
So dividend stock number 3, the GOAT, the Dividend King, that just announced its 61st consecutive dividend increase earlier in last week. Johnson & Johnson, ticker symbol JNJ. It's the number 1 position in my wife and my traditional account. So I'm very pumped up that it has found its way back on your dividend stock watch list, Lanny.
I was buying a lot of them in between 150, 155. We'll call it that range, not to have the numbers right in front of me. But yeah, the King is back on the list. I don't own nearly as many shares as you do. My account, I have about 56 to 57 shares. Again, not a small position, not a massive position for me by any means. So I'm looking to buy, especially after that latest earnings release that was very, well accepted, plus the 5.3% dividend increase they just had. So then it makes, okay, higher dividend now, so share price naturally will be going up. And let's look at the metrics though, Bert. What's the price to earnings right now?
162.69 is their share price. Forward earnings are 10.62. That's a PE ratio of 15.32. And their payout ratio looks great too. Their new dividend's $4.76. Gives you a perfect payout ratio of 44.82%.
Now, the 5-year dividend growth rate on average is 6.11%. The last increase was 5.3%. I actually expected it to be even lower. So the fact that they were even somehow close, again, good old reliable to that 5-year average of 6 to 7% is well accepted by me. We'll have to see once they do the spinoff of their consumer brands, kind of what the current dividend and what the dividend growth prospects look like for J&J. But again, doing it for over 61, 62 plus years is very impressive.
Yep. And their yield is 2.93%. So they're hanging in there just around that 3% yield mark.
Yeah. Down, year to date, 8.5 to 9%, down in the last 52 weeks, close to 10 to 11%. And again, this is definitely one of the biggest companies out there at over 400 billion by market cap. So guys, just to summarize J&J stock metrics, PE at 15, payout ratio below 45%, dividend growth rate over 6% for over 60 plus years, dividend yield approaching 3%. That is why it is on my stock watch list. The king of kings, good old reliable.
Yeah, so the thing I picked up as you were talking through is that you've been buying each one of these companies in little small spurts. Are you gonna? I'm assuming you're going to continue if they're still on your watch list. Are these the prices that are worth
Yeah,
grabbing one
yeah.
share
I
here or
think
there?
I think I like I like ELV back into the 440s. It looks like they kind of went up towards the end of Friday. They're over 450 now. I like J&J where the price is at. I like LyondellBasell where the price is at. Obviously, you guys do your own research there, but more than likely, probably looking to buy LYB and J&J, and then seeing what kind of turbulence ELV might go through to see if I can grab another share. Again, grabbing one share at 450 bucks isn't cheap.
Yeah, so everyone, let us know what you think of these three companies. Are you a fan of them? And also let us know what stocks you're watching that are not on this list. And if you haven't already, subscribe to our channel. Give this video a nice thumbs up, ladies, or anything else you want to tell the viewers out there?
Guys, let's get to financial freedom. Keep saving, keep investing, rinse and repeat on that. And you're either with us or you're against us. That was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.